All right. What's up, guys? As you guys know, today Freedom 3000 launches, and this is the strategy, guys, that I used on the harmonic scanner and was able to catch 256 pips last week. And honestly, would have been a whole lot more if I was trading a couple pairs at a time. But I was really just focusing in on one pair at a time, and I was able to generate 256 pips. And if I was able to hold those trades longer, I would have been able to generate a lot more. But let's just get right into this real quick. All right, guys. So as you can see, we have this harmonic scan right here, right? So I took this scan from the harmonic scanner, copied it exactly, right? And this is what I look for with the harmonic scan. So as you guys can see right here, the entry, I believe, here, let's just double check this real quick. Euro, all right, here we go. All right, cool. So we're gonna go to Trader's Way, Euro JPY, bat pattern. Okay, so here was the entry, 124.3278. 124.32. So this was the entry point on the harmonic scanner, 32. Right here. This was the entry range of the harmonic scanner. Now, what did I look for to get into this trade, right? I actually traded GBP JPY, but this one played out much cleaner. So this is the one I'm going to show you as an example, right? So here, let's connect this low and this low. You see this? This low and this low, right? And we're going to jump down here to my RSI. You see this low? In the exact spot of this low on this RSI, from here to that same range, we see the strength of this currency pair is moving up. This is called divergence, right? So if you guys want to put that down into your notes, this is called RSI divergence. Okay? So in this moment, we have two confirmations that this pair is going to go up. We have our first confirmation being a harmonic pattern. Second confirmation being RSI divergence. And our third confirmation, I'm sure 124.327 or 328 was a level of previous support, as you can see right here. This was an area of support. So now that gives us three confirmations. Area of support, all right? Three confirmations right there, okay? Now, what else can we do? We can take a trend line from this high, drag that out, right? And when it's gonna break out, we notice the divergence here, right? So we could have gotten into this trade here. See this this confirmation right here? To enter the trade, we have a bullish engulfing candle. This body is way bigger than this body right here. So this is a bullish engulfing candle. So let's add that to our list of confirmations. Bullish engulfing candle. 4 confirmations so far, right? And then our fifth confirmation being our parabolic SAR. So it had not flipped yet, but when it did right here, we could have entered we could have waited for this for the fifth confirmation, or you already have 4 confirmations right here. So you can take this trade right here and put a stop loss a couple pips below that low, just a few pips. If you had waited for this the second time it touched the entry right here, where it broke and retest this trend line, then you could have had almost the same stop loss again. So you could have taken this trade twice, actually. So the first time right here, right, you had a 20 pip stop loss, and you were able to generate maybe you close out 4 or 5 pips in profit right here. After this low was set, you said, okay, I'm gonna put my stop loss to break even somewhere around here. It doesn't look like it's gonna reverse completely, right? But that divergence is still in play. That divergence is still in play. Look, again, that divergence happens again from here to here, right? And then let's do this again from here to here. See, created a lower low, but this created a higher low. So again, we could have entered this trade again, and we had pretty much the same confirmations. We had the bullish engulfing harmonic pattern, area of support, boom, same entry, stop loss maybe a little bit lower, 23 pips, but in the end, you were able to catch almost 40, yeah, just about 40 pips. Right now would be 29 pips in profit. So these are small risk trades that you're going to get much high yield rewards with. So this was Euro JPY. Another one was Euro NZD. This was actually a trade that I did end up taking. I believe the harmonic pattern. This is a bigger one. This is something I'm predicting for the future. But just for the sake of the chart, let's go to a different broker. Let's go to Oanda. All right. So we turn this off. I like to mark it up clean, and then we'll go into it. So this was probably the harmonic pattern that painted. It changed afterwards, right? But still, my confirmations were there, so it doesn't matter to me that it changed afterwards. But this is the most ideal setup. Look right here. We're going to connect this low to this low down here, right? We're going to connect, and we're kind of just going to draw a trend line touching these 2 points like that. You see this pattern right here? This is called a wedge. In particular, let me show you with my Forex cheat sheet right here. It is called a falling wedge, right? So falling wedge is also a reversal pattern. So we can go ahead and do our confirmations again. So first confirmation, obviously, is our harmonic pattern. Second confirmation, falling wedge. Third confirmation, right here. I got in the middle of this candle. I'll show you why exactly. As soon as this SAR flipped, I put in my trade. I went long right here, put my stop loss right below that parabolic SAR. So it was a 16 pip stop loss, and I rode this baby up about 60 to 80 pips, somewhere in there. You can get out with SARs, or as soon as you just feel kind of comfortable with profit, or you see something else that is telling you to get out. Also, I believe TP1, it was really, really close to TP1, or maybe, yeah, this right here, this wick up here, it was just missed TP1. So we got out with as soon as this flipped right here, that's probably where I got out, around 60 pips. Okay, so where's our confirmation thing at? All right, so harmonic pattern, falling wedge, same thing. We have a bullish engulfing candle. It formed after the fact, but the confirmation was still there. But before that, we had the parabolic SAR. Parabolic SAR flip. Oh, and of course, obviously, when we have these wedges, they're able to be easily identified by the fact that RSI divergence is there. Let me change that color. You can see this low, this low, from this low is lower, but on our RSI, which is our relative strength index, which is telling us this currency is gaining strength, and you can see how it's starting to play inside of that wedge, how it's starting to get smaller, and so these waves are getting smaller and smaller and smaller and smaller and smaller until it pops, right? So this is what I look for. So in there, after the parabolic SAR flip, we also got that bullish engulfing, and the fifth confirmation being RSI divergence. All right, guys, so this is the bank strategy. This is what I use. This is what I have quoted as the bank's strategy. Really, it's just trading RSI divergence with the harmonic scanner and looking for these Forex chart patterns. Mainly, my best patterns being these wedges. These wedges is what is the real deal. Falling wedge, rising wedge. These triangles, symmetrical triangles, definitely as well. Head and shoulders. These are really the patterns that double bottoms and double tops, triple bottoms, triple tops, obviously. Like a lot of these are very, very valid. Flags are a little harder to do, but Stevenson is great at teaching them. Flags are a little bit harder to do. These rectangles, I really don't use them at all. The teacup, you got the gold cup scanner for that. So these pennants, these are good for after you're already in the trade, so you can just know, okay, I can continue to hold. This is looking like it's going to continue in the direction I want it to go. So, but to enter a trade, I love these wedges. These wedges, rising wedge, falling wedge, and then obviously the head and shoulders is a great one too. But my main focus is usually these two, the falling wedge and the rising wedge. So when you guys start to see these patterns, along with it, it's not even really about seeing them. If you can find the divergence, I'm sure you'll be able to find the pattern in there somewhere. That if you're getting divergence, there's most likely also a pattern associated with it. Like right here. It's very little, very minuscule, but this is technically a double bottom right at the bottom of a wedge. That gives you another confirmation to get into that trade. So we're talking 5 to 6 confirmation trades with 16 pip stop losses and gains of 60 to 70 pips. 60 to 70 pips. The same thing on GBP JPY, right? I entered a buy, small one right here on this flip. Why did I do that? Same thing. There was another harmonic pattern here, I believe. But the wedge was starting to form. We formed this wedge. And take this low. And take that low. See? Connect the dots. The SAR flipped. I entered the trade. Minuscule, I believe, is a 10 pip stop loss. It should have been even lower than that, but I ran it off and made it 10 pips. Stop level, 10 pips. Right? Look at that. And we're exiting the trade with about 40 pips. I did exit a little later because I waited for the parabolic SAR flip because I did anticipate this entire move happening. But I didn't get in for the next push up. I was starting to get tired, and I was really hoping that we get another nice one last push to the downside before we go up. But the markets do what they want to do, and this is where it decided, all right, I'm going to go up. So that's what it did. Right, and if you had gotten into this trade right here with that SAR flip, you would have had a, we're talking, as soon as that SAR flipped, you could keep it real tight with these parabolic SARs. So about 30 pip stop loss, and currently you would be over 100 pips in profit. I probably would have closed it out over the weekend. 100 pips with a 30 pip stop loss is still a phenomenal trade. All right. You would have been able, you honestly could have entered right here as well, but if you wanted to wait for that Parabolic SAR, you definitely could have. Why you could have entered right here is just because of the fact that this is creating a little teeny tiny wedge. Here's the wedge starting to kind of form, right? Here's a little wedge. Connect that low to the next low, and it's almost flat lined. So you're almost looking at this is actually not flat lined, but still divergence. So you could entered here, maybe put a 20 pip stop loss in it, not even really needing that 30 pips. Since we're bringing it down to a 15-minute chart and we're finding this small wedge, these are the trades that flip your accounts. They were talking about a 20 pip stop loss, right? Just doing 2% risk into a 20 pip stop loss. 2% risk on 20 pips. That means every 20 pips, you're going to make 2%. So if a trade went for over 100 pips, let's just say it stopped at 100 pips, that's a 10% gain on one trade. This is how I flipped. This is how I flipped my account. This is how you guys are going to be able to grow your accounts, right? So we're talking, this was over 130 pips. So really you had a 20 pip stop loss, at least like 12.5% gain on this trade. 2% risk, 12.5% gain. That's insane, right? These are the numbers that the Harmonic Scanner puts up. But nobody is using this tool. Nobody is using this tool. Why are we not using this tool, guys? This comes with the Platinum package, right? This comes with the Platinum package. This is the most deadly tool we have, right? Chris Terry himself uses this thing, right? Chris Terry loves charting up harmonics. And all these great traders are able to predict the markets with these harmonic patterns. Fibs don't lie. Fibs do not lie, and harmonic patterns are formed out of fibs. So literally you just have to wait for the final confirmations, because a harmonic scanner on its own, right? Harmonic patterns on their own have an 80 to 95% win rate, guys, depending on what pattern you trade, right? But 80 to 90% with another 6 confirmations attached to it is now you're having maybe a 99% win rate, like 99%. Like if you took 100 trades with 6 confirmations on a harmonic scanner, on a harmonic trade, you're talking maybe 90 to 95%, maybe high 90%. That's what I'm trying to say. High 90%, maybe almost never losing. Almost never losing. You're gonna lose some trades. It's gonna happen. That's why we do risk management. But you're gonna win, I want to say 90 out of 100 trades easily. So that's what I got for you guys. This is the bank strategy. If you like this strategy, if you start using it, please go ahead and do this. My Instagram is ARJUNBanks.official. Tag me in your IG stories, make some posts, tag me on those. And I'm going to be placing more content for you guys on my YouTube channel, which is also ARJUN Banks. And use this strategy, guys, make some money. And I will also be doing webinars on this strategy, live trading when I see setups. And in this group, for this group only, I'm going to be putting out I'll be putting out signals based on these strategies. So if you guys have gotten value from this webinar, please go ahead and tag me on Instagram and subscribe to my YouTube channel. Other than that, I will see you guys in the markets this week.